Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. So let's take a look again on the euro currency. So you can see as we're coming closer to important fundamental event that everybody keep an eye on. So I mean Wyoming meeting starting. It's big members of the market starts to shake the boat. So you could see that on the daily chart, despite that market hasn't quite reached the major target 1621, we already see some bullish signs are forming. So first of all, since the beginning of the week, we see some bounce here, starting upward action. So maybe this is some kind of the anticipation that Jerome Powell will tell nothing in Wyoming, or maybe it's just some speculative game. So you can see some early upward action before the target has been reached. So the bullish divergence is growing here. The divergence is normal since we're coming to major weekly and daily support area. Support, confidence support and agreement on the weekly chart. And the pairing of the divergence here, this is normal. So in general, but as you can see, market hasn't quite reached the target yet. So here it's a bit, it's a bit personal question here, how is better to take the position. For instance, if you trade on the weekly chart, on the daily, and keep positions for a few weeks, for example, and you feel nervous with trying to catch the precise point and you're worrying that you will miss the trade, or it's just makes nervous you. So in this case, you could just understand that currently market stands 1740. So till the target is 100 pips. So for a weekly chart, it's not really big distance. And if you hide stop somewhere below the weekly confidence, theoretically you could consider, if it doesn't hesitate you to see some fluctuations around, that market could move slightly lower, and this is not very important. So theoretically you could consider taking the position, long position right here with the stops below the confidence and not waiting for the market till it hits the OP. But this is of course only for those of you who trade on long-term charts, where this distance till the target looks minimal, not very important, and the potential upward reaction on this area, this will be much better than the potential risks that you currently could meet. But for those of you who trade on the daily intraday chart, this is of course too significant distance to the point, and I think that it would be better to still wait and see what will happen, because, well, somehow I suppose that may be just some speculative games before important events starting to bring volatility on the market. On the 4 time frame chart, we talked about some also bullish signs that is forming here. Even on weekend, it's already, we could recognize the shape of the wedge pattern here. Now, if you calculate the ratios from these retracements, the ratio stands very accurate to each other, and theoretically it even could be treated as a free drive pattern. So because you can see that second drive stands 127 of the first, and 2 extensions of the different value, 127 from the second, 1618 from the first, crossing in the same point. This is very typical combination for the 3 drives. Another divergence is forming, but this divergence stands a bit early, just because market noted the support. So another sign, bullish sign, that you could see here is some kind of the potential free drive pattern that also might be formed before reaching of the major 1621 target. At the same time, if you'll take a look at the hourly chart, first of all, in general, here still, you could see that the tendency still stands valid. So we have the lower lows and lower highs, which means bearish tendency, despite of the bullish pullbacks here. On the daily chart is the same. We have this tendency of lower lows, lower highs, and still stands on the market. And now, if you'll take a look at the hourly chart, you will see that market stands first at the confidence resistance. It's to level 1750, so you could see market commented. And second, take a look. This area is also natural resistance will be, because that was the previous low, since rounded bottom It usually forms relatively strong natural resistance area and also agrees with the same area, the same level. So currently, guys, I wouldn't make the conclusion that the market is turning and it's ready to go up. My opinion is that in general, besides if you'll take a look even at the price action here, well, it's not typical for the markets that it stands in the reversal. This type of action is more typical for the market that starts in the reversal, but this is relatively choppy, lots of pullbacks. So it mostly reminds me some speculative activity here. It's maybe the market makers played its own games here around this area. So that's why if you intend to go long, I still think that it would be better to wait and see what will happen. Because I do not like to take the position when I have major OP target behind. So I prefer to see that the market hits it and then could consider taking the position. Besides, taking into consideration that will be weekly confidence support. And any reaction here probably will be extended. So on the follow time frame chart, we definitely should see some reversal patch. Maybe it will be head and shoulders. So if we miss the entry at the first touch, then it will be moderate retracement that led us to step in a proper level. So that's why I think that the patient currently is more valuable to us than trying to search chances to take the position immediately.